Welcome to the program. Today we'll look at whether Malcolm Turnbull has found his mettle, and we'll also get an update on the budget next week. We'll talk about the market and when it's going to get to 6,000, and we'll look at ANZ and Woolworths. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, welcome. Our fearless leader is not with us this morning, so we'll get straight.
He's got pre-budget crookedness, is that right?
Pre-budget nerves. Maybe he's nervous about what's going to come out of this budget. But before we talk about the budget, you and I were talking this morning. Malcolm Turnbull, some education initiatives. Seems to be on the front foot at the moment. Things are positive.
A lot of announcements coming out of Canberra. I think they're all heading in the right direction. Universities, schools. I actually think Turnbull's found a bit of mettle. Might take a little while for the journalists and the political class to agree, but it seems like he's on the front foot. Shorten's on the back foot a bit, and maybe the budget's going to be as boring as, I won't say the word, but next week. It's looking to me like it's almost like a strategy. Let's get the major announcements out of the way.
What are you expecting in the budget? What are the key things people should be aware of in terms of investors?
I think given that, let's assume negative gearing changes and capital gains tax, the discount rate is off the agenda. I mean, obviously from an investor's point of view, a change to the capital gains tax discount would be the biggest impact. So let's assume that's off the agenda. I'm not saying it is, but that's what all the noise is. And negative gearing. I think the other thing investors need to be careful about, and this won't get a lot of noise, is just stock-specific type issues. So I'll give me an example of that. Clearly, beneficiaries of the budget news could be things like 9 Network, 10 Network, 7 Holdings, if they reduce licence fees. That's possibly on the agenda.
Yeah, with 10's recent announcement too, they're going to need that, aren't they?
And if they don't, well, that's a bit of a negative. But it's those type of announcements. So the stocks that could be impacted within the health sector, we've got discussions around, the Medicare rebate and indexation. So you've got to look at the sort of companies like primary healthcare, the health insurers. They always, any company that's dependent in some way on government revenue or government initiatives is always vulnerable to some type of shock or change in plan coming out of the budget. So I think they're the main lookouts. If you've got telecommunications, healthcare in particular, education, entertainment, things that are regulated, you just got to be a little bit wary about thinking about what the government could do there that could impact the stock. So I think that's the main call out for investors, assuming that we don't get any big change on.
Yeah. Now markets, they're going up, not overly quickly, but they are grinding high, at least locally.
Good performance in April. I mean, I think the market's got underlying strength. I think a lot of
doesn't want to sell, does it?
Doesn't want to sell. I think there's a lot of underlying demand, partly because of the super changes, partly because there hasn't been a lot of new supply. So I'm a little wary going into July. That's still 2 months out. But we're going up. I'd like to see coming onto the stock side. I'd like to see all the banks come out. ANZ result yesterday was a little disappointing. Look, ANZ is one of those companies. It's very hard to shrink yourself away to greatness. Expectations were pretty high. At the end of the day, its retail business was fairly flat. So improvement on capital return, but the NIM was down and the retail banking performance was pretty flat. So I think that's an issue for the ANZ, but I'd like to see a bit better outcomes for both NAB, which reports tomorrow, and Westpac on Monday, because the banks have led this market higher. So we got a bit of a.
Do they still have legs?
They still have legs. So we've seen a little bit of a sell-off.
Resources, obviously, they've been coming off.
Well, resources have been coming off. I mean, simply
you haven't found a bottom yet?
Not sure, because commodity prices still seem a little bit under pressure. I mean, I don't predict iron ore prices anymore. I find that too hard. So I just play it sort of reasonably index weight on those stocks at the moment, but. I don't think they're in the sort of middle ground territory at the moment. So I think good support in the market, underlying strength that doesn't want to sell off. But I think if we can get through, I'd like to see both the NAB and the Westpac result. I think they're important.
And Trump took a beating last night, but the US didn't sell off on that.
Yeah, Trump doesn't want to sell off. Apple's reported after the market a little bit less than expected.
Bad sales number.
Bad sales numbers. It's down 2 or 3% in the aftermarket. Who knows whether that will materialise? But again, they haven't been able to sell off in the US, and so it doesn't really matter if Trump's finding a few challenges. I mean,
if Trump can't get his wall through or not.
Well, I don't know whether that's really a bad thing for the market. So, but look, I think there's still underlying confidence in all markets, and that's why they're struggling to sell off.
That's all we've got time for. I'm Marty Switzer.
I'm Paul Rickard.
And we're mad about money.